What is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. We are seeing Bitcoin at a very, very crucial resistance, and what is likely to happen over the next week could have ramifications for Bitcoin for the upcoming months. So welcome in, guys. We're going to discuss all of this today. TXRX, welcome in. Good evening to you as well. Crypto OG Havoca, how you doing? Thank you for being here. Adam Hartz, welcome in. I want you to check something out on the Binance Perps chart. Check the daily time frame, RSI close to yesterday, and do the same for March of 20. Okay, we will check that out, Adam Hartz. I will go check that out in just a second. If this is true, then we have topped out. And yes, I do think there's a possibility we have topped out as well. Spin B, welcome in, man. It's good to see you as well. AXSCB, good to see you in here as well. And Abir, good morning to you. Welcome in. And thank you for being here and thank you for modding. The RSI on both relief rallies closed at the same exact level on the daily time frame before seeing a dump. The exact same. What are the odds? Well, man, the market never repeats itself, but it does rhyme. And so let's see what happens here, guys. But let me go ahead and zoom out real quick to the daily time frame. Now, I'm going to turn on our large range, which is our macro range, all of 2025's price action. And I'm going to turn off our small range. And we are coming up to a very key resistance, being the point of control of the range in confluence with our anchored VWAP from the all-time high. Now, the way we've moved up initially from our 80.5K lows looks like a corrective move. And because we did come down and hold the value area low of that large range, we were looking for another move up to that POC to complete a larger complex correction, a larger three-wave complex correction to the upside where we could potentially reject between $96,500 and $98,500. And then we could see that big breakdown to make new lows below 80.5K. So do we know if that's confirmed yet? No, we do not. We are just visiting this point of control yesterday, and it is possible that we form a bit of a range up here, maybe throughout the weekend, maybe even for a week or longer. But we are at very, very key resistance, guys. And I told you guys when we got up to this level between 96.5 and 98.5, I would be looking for bigger short positions. So earlier today, I did posted this in the Telegram. I did enter the short position this morning upon the rejection of our golden pocket. If we zoom in onto the 1 hour time frame, you can see yesterday we wicked above the point of control and the anchored VWAP on Coinbase. But it was just a wick above. And oftentimes on these pumps, you'll see a wick above, but a daily candle at or below that level. And we did close our daily candle right kind of at that anchored VWAP. A little bit of a wickage past it. Then after that, we saw a bit of a drop, breaking market structure to the downside for the first time in quite a while. And we broke market structure just very locally. But you can see here, that was our market structure break. By breaking that hourly low there, we had broken market structure bearishly on the hourly time frame. So because we broke market structure bearishly, we have confirmed bearish divergences on the chart, higher highs in the price action, lower highs in the momentum waves, both on NAMI and Market Cipher B. The money flow had topped out on Market Cipher B and was curving to the downside. And we did have confirmed money flow bear divs on NAMI. And as we rose up overnight and this morning up into New York Open, hitting into that golden pocket, if we pull a local golden pocket from the highs from yesterday to that low that was created yesterday, you can see the golden pocket was in perfect confluence with our anchored VWAP bearish backtest. Now that we lost the anchored VWAP on low time frames, we were looking for a potential bearish retest, bearish backtest of this area. And if we did reject, we would expect new lows below the low from yesterday. Well, we got that this morning. We did get that little scalp trade, and I did enter short. And I told you guys this, I entered short upon this golden pocket rejection. Now, could this be the start of a much larger dump? Yes, it absolutely could be, but we are not there yet. We have to see, I want to see Bitcoin break some larger market structure bearishly. And we also have this channel midline, which held us inside of this ascending channel that we've been in for 9 weeks or so. And now that we've broken above and closed the daily candle above this midline, it could still act as support, seeing a 3-wave corrective move down to that midline, where then we could come up and take out the highs into actually hitting that 98.5K area of resistance, or potentially even coming all the way up to about 101, 102K, where our key 50-week moving average is. That 50-week moving average. And that bearish backtest and rejection of this 50-week moving average could mean really aggressive volatility to the downside. So this is what we'll be watching for over the next days and weeks. But I have to say, what we're seeing right now on Bitcoin, it's a crucial time for Bitcoin. For 6 to 8 weeks, we've been waiting, and really ever since this area here. So what was that, December 18th? Since December 18th, for about a month now, we've been looking, because we held the value area low of the range, for a possible move at first to take out your range highs. But if you take out your range highs, then we're looking for a potential move to come up to our larger point of control. And that has now been accomplished. So what the decision being made over the next week or so at this point of control, at this anchored VWAP, is going to be crucial for what happens for Bitcoin for the next months. Very similar to the anchored VWAP from the all-time high. When we lost it, you have a bearish backtest. Yes, we got a higher low here, but we did another attempted break of that anchored VWAP. We failed, and then that's when you see aggressive dumpage to the downside. Let me go ahead and throw on our anchored VWAP from 107K, and let's just grab an anchored VWAP here and throw that on. Let's see here. From 74K lows. From the 74K lows, if we throw on that anchored VWAP, and I'm just going to hide our all-time high anchored VWAP for just a second, it is similar to what we're looking at here with the anchored VWAP. So when we were in this distribution range, I call this the all-time high distribution range. We were in this distribution range in late 2025. We came down October 10th, bounced directly from the anchored VWAP. Wicked past it, but bounced directly from the anchored VWAP, bounced again, bounced a fourth time. But once we finally lost it and confirmed a daily candle close below it, that is when we saw, after a small dead cat bounce to bearishly backtest that anchored VWAP, we saw major volatility to the downside. So what we're looking for now is we're in an anchored VWAP from the all-time high, a downtrend anchored VWAP. So if the overall larger downtrend is going to continue, then you would expect to reject from this very key volume resistance, and it's also our point of control of our year-long range. You would expect to reject from this general area. And if we do see a rejection and a daily candle close, like a pretty big bearish daily candle close rejecting from this area, we could see that volatility really kick into the downside, where we would then expect to maybe take out the 80.5K lows. And I'm not saying that's going to happen in one day or even 1 week. And the drop to the downside, we will get bounces along the way. We will get some movement along the way. But depending on how we reject here, if we reject here, this is really going to give us a bias for the next couple of months on Bitcoin. Now, on the other hand, as a trader, we have to look at both scenarios. So in a bullish scenario, if we can start to flip this point of control and anchored VWAP, and really we want to see a weekly candle close above it. If we can close this week's weekly candle above that anchored VWAP, then yeah, we might see a small pullback to backtest, like an immediate time frame backtest of that point of control, maybe over the weekend or Monday, dropping over the weekend into Monday. And then we would expect to see a rise at least to the top of our channel, which is where that 107K or 74K, 74K anchored VWAP would be landing right in that area. And also our 50-week moving average is going to be landing right in that area. And then if we do reject from the 50-week moving average, we definitely do not want to lose our point of control, which would also be in confluence with the midline of the channel. So if we reject from the top of the channel, we can expect to move down to the midline. If we can hold the midline on a higher time frame bullish backtest, there is still a possibility we can try to bust through that 50-week moving average. But seeing a rejection, we are at pretty much a very crucial area where if we do see a confirmed rejection here, then we might see that volatility kick into the downside over the next couple of months. Now, how can we get a bias here on whether we are likely to see a rejection or not? Well, this is where we can come into our oscillators here, and we can look at our oscillators and get a little bit of a bias on what's going to happen. So we want to see, as we're coming up to macro resistance, if it's going to be a major lower high on the charts before making another lower low. As far as macro price action goes, we want to see some high time frame bear divs as we're coming up to this resistance. So we're on the daily time frame. Do we see bear divs on the daily time frame? Yes. Market cipher B, and especially if we close this daily candle red or a bearish engulfing daily candle today, this momentum wave will start to roll over, confirming the bearish divergences on the daily time frame. Now, I talk about this a lot, but one drive of bear divs will not overpower bullish money flow. And if we look at market cipher B, our daily money flow is still heavily into the green and rising pretty steadily. So for me, that wouldn't be enough to give an overall bias of, yes, we're going to see a rejection here. But now we can go down to NAMI, and NAMI is a bit quicker at confirming these bear divs and confirming the money flow. It's based off of actual money flow in the market too. Market cipher B is it's an algorithm of it, along with EMAs and a couple other things. So if we look at NAMI, do we see bear divs on the daily time frame? Confirmed already, because we got the red dot and the momentum wave already started rolling over. So confirmed bearish divergences on NAMI on the daily time frame. Well, let's look at the money flow on NAMI. Does the money flow show bear divs? Very, very slight, but we are showing bear divs on the money flow on NAMI as well. So as we're coming up to this very key resistance, we are seeing some bearish confirmations on the chart. We also have to take in mind the overall market structure, because market structure is king, and the trend is your friend until the end. And the larger macro time frame trend since early October has been a downtrend, making lower lows, lower highs, lower lows, lower highs, lower lows. All of this could be a lower high before putting in another lower low. This entire rising channel, ascending channel, could be a complex corrective structure, which I've been talking to you guys about really ever since the lows and ever since we started forming this. And we could continue this dump to make new lows. So very, very crucial time for Bitcoin right now. We really want to see, if you want to be a bull for Bitcoin, we do want to see that flip. But today, what we're seeing today right now on the charts, and actually let me zoom out to the hourly chart. It was pretty crucial that we did reject from that anchored VWAP. And let me go ahead and throw that anchored VWAP on again. Let's see. Is it this guy right here? Anchored VWAP from the all-time high. I'm just going to delete this one real quick. Pierce above it, fall below it, break market structure bearishly. So this is the trader. Now, this is talking about more of scalp trading. Because we broke market structure bearishly on the daily, make a lower high into the golden pocket, into the anchored VWAP. By the way, guys, as we were attempting to break this anchored VWAP earlier today, we were confirming bearish absorption on the chart. So you can see we were making lower highs in the price action throughout today. We are making higher highs in the CVD, and our open interest was pretty steadily increasing during this time. So it was bearish CVD absorption. We were seeing whales, big whale limit orders up here, absorbing all those long positions near macro resistance. You know, we had a lot of people longing up near macro resistance, which is a sign, it's a formula for disaster. And so we are seeing that bearish CVD absorption starting to play out with this drop to the downside. Now, the target for this bearish CVD absorption is just to take out our local low just below us. So yes, we could still, after taking out the local low, let's see, where is that? Sorry, guys, I am trying to find my pin here. There we go. All right, so if this local low is going to be the target for this bearish absorption to play out. Now, I want to zoom out on the higher time frames on Coinalyze, on our order flow, because there is something that is a bit, because we are seeing local bearish CVD, which means we could make new local lows and potentially come down to that channel midline that is just below us around $94,600, $94,700. But as far as our larger push to the upside that we've seen over the past week and a half or so, we are confirming right now some bullish CVD absorption. If you can see here, we are making really from the weekend lows, from Monday's lows, we took out the weekend lows into that SFP, and then since then we've been pushing up in bullish market structure in an impulsive move to the upside. And we are making higher lows in the price action. We are making lower lows in the CVD. Now our open interest is a bit interesting. Not from the weekend, not from Monday, January 12th, but if we go over to, let's go over to the SFP that I entered late Monday, this internal SFP right here, I entered that long position, which I'm still in, right around 91K. And from this area right here, let's go back to our order flow. That is going to be right in here. Let me clean this up just a bit. This area here, you can see we do have overall CVD dropping, and then your open interest from that area overall is rising. And that is technically bullish CVD absorption. But I do want to give you guys a warning because I talk about this a lot on my channel. When you see absorption, when you want to see a really nice signal of absorption, like we saw earlier today, we saw that steady increase in open interest, a nice steady increase. But even though we are increasing in CVD or in open interest, right now, in the middle of that increase, you see big prolonged drops of the open interest, big prolonged drops of the open interest. And when we see big prolonged drops within a steady flow of open interest to the upside, or within a flow of open interest to the upside, that oftentimes will give you an invalidation signal that the bullish CVD is going to play out, that the bullish absorption is going to play out. I have shown this, I've backtested this many, many months. I've shown you guys this over the months on my channel, that anytime we see these big drops, it is less likely that that bullish absorption plays out. It is not a guarantee. It makes it less probable or less of a reliable signal. And CVD absorption is a very reliable signal for traders. So we have some warning signs here, guys. We have some warning signs. 1 hour bear divs on the chart. Money flow bear divs on the chart on NAMI. If we zoom out to the 4 hour chart, now on the 4 hour chart, market cipher B is not showing bear divs. We made a higher high in the momentum wave, but we do have bear divs on the money flow, and in money flow is more important than the momentum. So we do have bearish divergence on the money flow between our prior high and our new high we made yesterday. And then if we look at NAMI, really from that prior high, we have confirmed momentum bear divs on the chart, but not money flow bear divs. It's a double top on the money flow. Double top here. So a little bit of a mixed signal, but we do see some bearish confirmations here. Now, if we zoom out to the 8 hour chart, this is where things get interesting. And the 8 hour chart, guys, is a very reliable time frame I've found for these intermediate time frame bear divs that generally bear or bull divs that tend to play out. So on market cipher B, we have equal highs in the momentum waves, and our money flow looks decently bullish still. Now on NAMI here, we have very slight bear divs. If you can see, this high here of this momentum wave is just a bit higher than this momentum wave. So very, very slight bear divs, but we have the money flow bear divs. And those money flow bear divs are something you want to pay attention to. Lower high in the money flow between our two highs. And then we already talked about the daily, but we can go to that 12 hour as well. 12 hour is confirming already on market cipher B, or about to confirm bear divs. On the 12 hour, you can see the bear divs are confirmed on NAMI, and the money flow is about equal highs here. So very key resistance. We do have a little bit of mixed signals here. Some, I guess what I would say from this mixed signals is oftentimes when you see mixed signals like this, a range forms, a consolidation range. And this is where we can see this consolidation range play out at least until next Monday, and then a decision be made maybe next Monday, maybe not for a week after. So we'll have to see, but very, very key resistance we're at right now. This is important. How Bitcoin closes the weekly candle this week is hyper important. All right, let me go into the chat real quick, say what's up to everyone. We could still, AXSCB, we still could get 98K. We still could get a new local high. Actually, before I go into the chat, I just want to talk really quickly from that low that we looked at on Monday, the SFP of the weekend lows, right? We SFP'd the weekend lows on Monday morning. we had a pretty clear impulsive structure: a wave 1, a wave 2, a wave 3, a wave 4, a wave 5. After your impulse completes, you're looking for a corrective move, a 3-wave corrective move. Now, in a sharp correction, that is going to be an ABC, a 5-3-5, impulse down, corrective move up, impulse down. And generally, you'll drop to the golden pocket from the lows of the impulse to the highs of the impulse. You can drop as far as the 786. But this area here, pay attention to this golden pocket, $93,000 to $92,800. So let's go ahead and go into our liquidation heat map here. And I want to show you guys, where is the liquidity below us. You can see here on the 3-day time frame, our liquidity is coming down right into 93K, $93,300, right into that golden pocket area of support. So if we come down and hit into 90K, it would wick out all of that liquidity, hunt all of that liquidity that is below us. Now, on the other hand, if we go back to the liquidation heat map, you can still see we have some liquidity above the highs. And of course, anyone that shorted this golden pocket earlier today, like I did, you're going to put your stop above the local high. And that's why we have some liquidity up there. Now, the liquidity below us, I would say 107 million. We have up here 102 million. So relatively equal liquidity on both ways. And when you see liquidity like this at like a little mini range, and if we zoom it into the hourly, this could be a sideways range forming here. A sideways range between the point of control and the midline of the channel. And because we have liquidity above us, because we have liquidity below us, we could see that consolidation where we come down, grab that liquidity, move up one more time, take the liquidity of the highs, and then we might confirm a bigger dump to the downside if we see a liquidity grab and then a rejection. So this is something that, because of liquidity on both sides of us locally, we need to pay attention to a range forming where market makers like to stop out traders on both sides, wreck everyone locally in the vicinity that is longed, and then the bigger move plays out. Whether that bigger move is going to be a flip of the POC to support to continue up to 101 or 102K, or whether that is going to be a rejection after a liquidity grab and a giant drop to the downside. Looks like Bitcoin is starting to dump, guys. Like I said, I expect us to come take the local lows from earlier today. We had the bearish CVD divergence on the chart, and it looks like we're coming down to take out those lows right now. Let's go ahead and throw that on. So as soon as we take out those lows, the bearish CVD absorption is technically played out. Now, it doesn't have to end there, though. We might SFP it, and then we might see a move up, but we could be seeing a larger dump as well. And what I want to talk about on the hourly chart, we could be starting to see some impulsive price action to the downside. It's a little bit rough to count this as an impulse to the downside, but if you zoom in on low enough probabilities, there is a count where you can look at that. You know, you have to kind of go on real low time frames, which gets really messy with Elliott waves, and you can kind of fudge the waves. But if we're looking at this as a wave 1, our wave 2 did retrace to that golden pocket, which is a common retracement for a wave 2. If we're about to see a wave 3, we want to break down and really break this midline, break these prior lows here with some volume to the downside. You want to see increased volume on that push to the downside. So we're going to be watching here as the stream develops, as our stream takes place, if we're about to see some volatility to the downside kick in. Now, on the other hand, if this is just going to be a 3-wave corrective move before continuing up to take out your local highs, then we probably want to see our midline hold. But also, if we take a trend-based Fibonacci extinction, and actually, do I have that on the chart? No. And we look at the trend-based Fibonacci extinction, our targets are between the 1-to-1 and the 1.236. And you can see that 1.236 is actually a pretty nice target because it would grab this liquidity here. It would be a really nice liquidity grab of Tuesday's lows into that 1.236. It would be a little bit of a wick past the midline, but we do see that sometimes, wickish past the midline and then bounce from support. So we'll be keeping an eye on this as the stream develops. Now I'm going to go into the chat, say what's up to everyone. Sorry, guys, I kind of rambled a bit before saying hi to everyone. Tony C, welcome in. Thank you so much for being here. R Pink, let's go, man. Love you, man. Thank you for modding. Thank you for being here. And Jaffiel, much love to you, man. Jaffiel's definitely an OG in here for sure. ZMX, welcome in. TA is nice and all. Are we going up or down? Yeah, that's the thing. We don't know yet. We don't have clarity yet, ZMX. And oftentimes at macro resistances, you're not going to get a straight move. It's not going to be like a big push up. Oh, what the heck is going on here? Push up, rejection, and straight down. You oftentimes will form a range here and let some of the bigger players, and these ranges, by the way, on low time frames, intraday time frames, or intra-week time frames, are oftentimes like a Wyckoff distribution range or a reaccumulation range that occurs. So at these major macro resistances, you want to see some range form, and that's exactly what's starting to happen. You want to see an exhaustion of the very bullish uptrend, which we are finally starting to see now. The big break would be breaking that $94,500. If we break market structure bearishly, yes, an SFP there would be nice, but if we don't SFP that, then I would be expecting a move at least down to 93K. We do have some new support levels below us as well, guys. We have a new naked daily point of control from yesterday, and that is going to be coming in right around those lows at $94,376. We also have a daily level that is confirmed, and that daily level is going to be at $93,800. So I would say more locally, if we're going to see a three-wave corrective move, this is the general area I would want to see a bounce from. Real nice support locally here, but there is a possibility with some of the bear divs we're seeing at key resistance that we could see some impulsive price action to the downside. Also, we have to keep in mind that this entire move for 8-9 weeks does look like a more corrective structure, and it's in a rising channel, which has a higher probability to break to the downside. But this could be the end of a major complex corrective move before seeing a true breakdown to lower levels. Okay, so Steel and Stone, welcome in, man. How you doing? Thank you for being here. Decrypto, good afternoon to you. Thank you for being here as well. Diamond Palm, thank you for being here. Big Divine, what it is, foo. Yeah, man, it's good to see you in here. I'm just looking at the price action, man. I got into a short. I like my short position that I'm in. I'm still, by the way, guys, in that long position from, what was that, Monday or Tuesday? No, right at 91K, pretty much right in here. I'm still in that long position, but I'm like 85% out of it. So if we do start to lose market structure, I'll probably just close it out. But I do have another TP. My final TP is around $98,500. And then if I need to enter another scalp short or scalp long upon a rejection, I will. But that is my final TP for that. Yes, I did short it already, ZMX. I shorted that golden pocket and the bearish backtest of the golden pocket in confluence with that anchored VWAP this morning. So right in here, and let me turn on that short trade that I've got. So this short right here, 4.5 to 1 risk to reward ratio. That's coming down to your golden pocket. Now, another thing I do want to talk about, like I said, guys, if we do see this 5-wave impulse from Monday, 1, 2, 3, 4, 5, ending, and we are going to see a sharper correction to the downside, Well, that golden pocket area, not only is it your kind of prior highs in here, you can see it's kind of prior highs or around those prior highs, but it's also a common retrace target if we're going to make a higher low and then continue higher. So that $93,000 area is a TP that I have again on that short trade. Okay, when mixed signals are given like this, and many times this is an effort by the market makers to smoke screen their move. Tony C, you're absolutely correct. And also the market makers are playing with much bigger bags than us. So when they want to get into larger positions, sometimes they can't just take a short, from here or from here and have that full position fill. They're filling up within this range. Anytime you get to like the value area high of the range or towards the highs of the range, liquidity grabs of the range, they're going to be entering shorts if their bias is bearish and they think they're going to get a swing short in. Or if they're bullish and they want reaccumulation, anytime we get down near the lows of the range, they're going to be buying up more in the hopes that this is going to break out to the upside. So oftentimes at these macro resistances, you see mixed signals on the oscillators because the market makers are building their bags. They're building their bags, whether it's a short bag or a long bag. They're building their positions. Okay. Hey mate, it's shoot, where was that? It's 6:25 here in Australia. 6:25 a.m. Wow, Tony Box, welcome in and thank you for joining from Australia. I always try to catch your videos. Awesome work, great information. Keep it up. Well, thank you, Tony Box. Thank you so much for that, and thank you for joining. Awesome commitment, man. Awesome commitment. You have to get up early. All right, guys, we're SFPing that low. Hold on, I want to look at this real quick. So we just took out the lows, confirming the bearish divergences playing out on the chart. Bearish divergences have now played out. Let's see. Now we're seeing a really nice drop in open interest here. So positions are getting stopped out. That's why our open interest is dropping here. Positions are getting stopped out. Let's see if we get a confirmed swing failure pattern. I am skeptical that we will get an actual swing failure pattern. I would like to drop a little bit lower to get a bigger swing failure pattern of these lows down here. But let's see what happens here, because now our bearish CVD divergences have played out. Lower highs here. We were making higher highs in the CVD and rising open interest. So if we fail to grab liquidity and fail to see a successful liquidity grab here, I think we could make it easily down to $94,500, but we might continue dropping even further. Big deals. Welcome in, man. It's good to see you in here. It's really good to see you in here. It's been a while. Can you leave those levels on your chart so I can see on your published one? Oh, after the live stream you're talking about, can I leave the levels on? Yeah, I can try. So the chart gets really, really messy. And of course, I'm checking the chart throughout the day, and I don't like to leave my chart messy. But I'll do my best to leave the levels on for you guys. But you can also mark them out yourself. You guys, if you go in, I can turn on my levels. You can go into the live stream, and so you can see my naked daily is at 94,518. If you want to mark that out yourself, just grab a line, a horizontal line. You can click it anywhere on the screen. You come up into settings and you go to coordinates, and then you can just type in 94,518, 94,518, and then hit OK, and it's going to snap to that area. So you can put that on the chart for you. Same with the daily, or you can mark out the dailies manually by going to the daily time frame, and when a candle body opens and closes. Okay, actually, that's an old daily. I'm sorry, guys. That is an old daily level. But you get my point. Where a candle body opens and closes at the same level, that is considered a daily level. Or like this was a daily support level. Open and close at the same level. That was a daily support level. But of course, we've already wicked into it. That's why it's off the chart. This should not be here. I must have not caught the deleting that one. But you can see here, daily level. Right in here, open and close. We do have a daily there. A naked daily is also there. And today, if we close today's candle red, this will be a new daily level, 96,955. All right, we're flirting around with that low. Doesn't look like we're going to see a successful swing failure pattern. We are seeing some bull divs on the 5-minute on NAMI. Lower lows, higher lows here. Money flow is starting to come up. Momentum on market ciphers bottoming out. So there is a chance this can make a move up from here, but we'll see. Right now, I'm not liking what I'm seeing. Please watch 94.4 for a big turn. Yeah, 94.4 is exactly where I'm looking. 94.5 to 94.370. That's exactly where I'm looking for a little local support level as well. Naked daily point of controls in there, your 1.236 Fibonacci extinction, and that liquidity grab. And it's right around the midline. The midline's a little bit higher, but yeah. Okay. Good evening, Michael Mitztal. Welcome in. So where your TP1 on the short. So really a TP1 would have been probably at these lows here. Now that's not a really good risk to reward ratio. So if we're looking at shorting, and I did short pretty much right at the golden pocket, stop is going to go above the local high. You give it a little bit of breathing room. If we take our first TP here, it is a 2-to-1 risk to reward ratio, but I'm actually looking at a little bit lower. My TP1 would be the SFP of this low at 94,500. That's going to be a 3-to-1 risk to reward ratio. And then, of course, a second TP would be around this golden pocket just because your prior highs are in there. Probably near the 6.5 of the golden pocket, though, because your prior highs are right around there. And then I would look to compound this trade because this could be a possible swing short position developing right now. So yes, right now I'm playing it as a scalp, but as this range forms, if we do start to break this range to the downside, so break this market structure bearishly by breaking this low, and then we see a bounce and come up to this like golden pocket area, I will compound the short position to look for a much larger drop. And I'll try to let you guys, I'll keep you updated in the Telegram on if I do that. Now let me scroll up to the top of the chat. Oh, Luciano, welcome in. Thank you so much for being here. Nice to see you, man. Short the absolute top yesterday. Awesome, Luciano. That is great. Dad87, welcome in as well. And you're welcome, man. I love being here. Love doing the TA with you guys. Yeah, that's a good idea. Okay, thanks. When you have time later, can you go over when to remove certain levels and how? Yes. So ZMX, when I remove a certain level is after it's been hit. So like a naked daily point of control. Let me just zoom out to the hourly chart. I'm going to throw on let me turn off all the levels real quick. And I'm just going to hide this and hide this for a second. But like if we're looking at naked daily points of control, because they're strong because they're naked, they're levels that haven't been tested yet. But you can see like for instance, this was a naked daily point of control. We dropped, came down into that general area. Once it's been tapped, I generally take it off the chart unless it's also a really important support resistance flip. Let's find a better example of that. Let's go on to the weekly time frame. Yeah, okay, so see, as we had a naked weekly point of control at $96,000. And on Monday, if you guys, or it was Tuesday, if you guys remember, we came up to that naked weekly point of control. We rejected, and then we saw a small three-wave corrective move down to flip that midline to support. But I'm not going to leave it on the chart because it's already been tapped. It's kind of already been used up. Think of it as like a fresh level. Once it's used up, you get rid of it. And then, of course, we held local support, so we made new highs. We just pushed straight through it the next time. Look at that imbalance candle right in here that pushed straight through it the next time because it was kind of used up. Now, sometimes you will get a rejection multiple times from an area, or will kind of wick through it or form like a topping pattern around that area. Weekly levels are very strong on the chart, like time frame levels at weeklies. Sometimes you will see, like if we do come down, say we do see a big drop down here, come down, hit the weekly. It's also a naked weekly. There's a lot of confluence at $87,500. And then we make a lower high, and then we come down and take out that low, make a liquidity grab of this low. I would still leave this box because there's so much confluence at this support. I would leave this box on the chart maybe to see a range forming in here. So it would overall be our support for a kind of a range. And then you would expect to see a move to the upside if it's going to hold. Okay, I want to scroll up to the top of the chat real quick because at the beginning of the stream, Adam Hartz asked me, okay, I want you to check out something on Binance Perp chart. Okay, Binance perpetual chart. Let's see. BTC. Binance perpetuals. All right, and then you said check the daily time frame RSI. Okay, so let's grab the RSI. Daily time frame. All right, and you said look at close of yesterday and do the same for March 9th, 29th of 2022. So yeah, we had a pretty big wick on that daily time frame yesterday towards the top, and we had a bit of a wick towards the bottom too, but a pretty standard daily candle and a pump a day. But let's go down to 2022 now. Let's scroll over here. Let's see, March 19th. March 29th of 2022. Okay, let's see. June. All right, so yeah, I think you mean this high right here. Yep. And you know what? Very interesting because it's a very similar range. Remember the other day, this was also in the bear market, the confirmation of the back test of the 50 EMA in our last bull cycle. So very important. Adam Hart's good comparison because this range, I showed you guys this yesterday, this range compares really, really well to the range that we're seeing right now on the charts. And also, this was our big bearish backtest, right? Lost the 50-week moving average, bearishly backtested. If you reject, you expect more downside. So now you're saying on March 29th, let's go look at that high on the daily time frame. Yeah, it does look very similar. Now notice here, guys, it looks similar. You got that final pump to end it. But look at this little range that formed for about a week in here. And this is what I'm talking about right now. We're seeing a little bit of indecisiveness on the charts. And so what I would say here, there is no bear divs confirmed on the daily time frame up here. Now our chart looks even more bearish. Now the RSI, yeah, it's topped out. What is that? Topped out at 80 up here, 70. It's topped out pretty high. And then you do see no local bear divs there on the RSI. Let's go now to our current time frame. And let's look at the RSI. So RSI hitting exactly 70 again. Awesome to see that. Adam Hart's like the same exact level. But in some ways, guys, we could be looking at this as the same sort of bearish back test before seeing that drop. And if we just zoom out here, I think I showed you guys this on a different chart. I still have the fractal on the chart, but if we take a fractal of that range, so just grab the bars pattern, we're going to look at this upward range, and we just take this over and we look at this. It looks like a very, very similar range, right? Very similar in structure, very similar in time. I mean, the resemblance is uncanny here. And this is, by the way, that range that we saw definitely looked like more of a corrective range before continuing the overall downtrend, right? Lower lows, lower highs, lower lows. Then you got your local break in market structure bullishly, but overall the higher time frame was still creating a lower high, and then you dumped aggressively. So this was a corrective range that probably got a lot of people longing, thinking we're going to break to new all-time highs again, just like we are seeing now. Let's see how big of a drop that was. That was a 52% drop, so a bit more aggressive than the 36% drop we're seeing now, but very, very similar. I mean, the resemblance here is uncanny. And yes, this could be the end of a corrective range, guys, before ultimately seeing a bigger drop to the downside. And I just want to give a warning about this. Now, in the past couple weeks here, or before this range really started to develop, you guys saw me often talking about our double 1-2 impulse to the downside. A wave one, a wave two, an internal wave one, internal wave two, and this was our third wave here. And then we were looking for some 4-5s to break those lows at 74K. Now, I would say the double 1-2 has been invalidated. I would confirm that it's been invalidated because your fourth wave can't hit the golden pocket of the third wave. So if we go from the highs of 3 to the lows of 3, your golden pocket's been tapped. And actually, that's where we're at right now. It's tapping it. So it would invalidate the move down as a double 1-2 motive wave, an impulse wave to the downside. But you can also still count this as a wave one, a wave two here, because a lot of the exchanges did drop. Coinbase was one of the only exchanges that stopped at 107K, but a lot of the exchanges did make lower lows down to about 101K. So I know some Elliott wave counters that are looking at this as a wave one, a wave two. All of this is the wave three. This is a wave four before seeing a fifth wave to the downside, completing a motive wave to the downside. And also remember, we're looking at that bigger flat correction in here, where in your C wave, you do want to see a motive wave or an impulse to the downside. So yes, and if we take our Fibonacci golden pocket from those 116K highs down to the 80.5K lows, this would be our invalidation. If we hit 102.2, it's going to be our invalidation for this being impulsive. Now, if we do come up here and hit this, then we would have to classify this as more of a three-wave corrective structure, and we could still get a lower high on the charts. We could now get a three-wave corrective structure, and then we could get another three-wave corrective structure, making a bigger WXY correction, still coming down to take out those lows. But we have not invalidated the impulse of a wave one, wave two, wave three, wave four, wave five. Now, your wave four retrace is often longer than your wave two. So it is longer now than your wave two. And it does retrace. The targets for a wave four retracement are between the 382 Fibonacci and the 0.5 Fibonacci. One of the reasons why I'm looking at that $98,500 area is because of this 0.5. Because until the larger motive possibility, bearish possibility has been invalidated, we have to keep it as an idea on our chart. As traders, we have to look at both scenarios. So we're in the zone though. We're in the zone between the 382 and the 0.5. It doesn't have to reject exactly from that area. Because, and the reason why this in between is an important area, because this is where your POC is, right? So important POC there. So yes, it is likely that we could, wow, okay, Binance Perpetuals, there we go. It is in this area. So yeah, you might not make it up there because we have such heavy resistance right here. And let's throw our anchored view up on this perpetual chart, tapping the anchored view up perfectly on the perpetual chart. So very key resistance we're at right now, guys. Just be careful. All right. Let me scroll back into the chat. All right. Dumping. Yep. Let's go. So no games, no preaching, no wasting time. No hate for those that do. I enjoy other channels, but this channel is where it is for some true education. Well, thank you, Tony. I appreciate you being in here, and I always appreciate you being so supportive. All of you guys are really awesome. I love the community we're building. Great people in here, and you guys are no nonsense people either. You're here to learn. You're here to actually find good trades or just get my perspective on the market, and I appreciate that from all of you guys. Okay, had a bear flag projection a bit about 94.5 to about 94.6. So a bear flag breaking down to about 90.4. Yeah, I can see what you mean. If this is like the flag and this is the pole and then the flag and then you're going to get another pole. I mean, I would just be looking at it as a 3-wave corrective move, a zigzag correction where your B wave often does reject from that golden pocket. But yeah, very similar. We're very similar. One's looking at it in terms of pattern trading, another's looking at it in terms of Elliott wave trading. But looks like we're trying to bounce, guys. We're trying to bounce from those lows, and we are reclaiming those lows right now. Green dot and bull divs confirmed on the 5-minute. Let's pull our volume profile. So now when we're forming a range, like I just talked about, it's likely that we form a range in this area. So what do you do when ranges form? You grab your fixed range volume profile and you get the important volume levels within that range. Okay, now we can see that we are below the value area low. So as long as we don't reclaim this value area low, like if we just come up here and reject, I would expect to keep dumping, probably at least to $94,500. So be aware that that is absolutely a possibility. We need to reclaim about $95,900. If we can reclaim that, it's very possible that the bearish CVD played out. We grabbed the liquidity from our local lows, and we could make another attempt to at least break these lower highs that built up here, the liquidity from these lower highs. Okay. Hey, Divine Hood is really solid and liking his TA. I keep learning every stream. It's my beacon in the darkness. Well, ZMX, thank you so much for that, man. I appreciate it. You guys are all awesome. Not sure if I should move my buys up or not from 93.4 or just leave it. So you're talking about like longs or some spot buys to bring to higher prices. Well, I mean, we're at key resistance. Okay. The bottom of the range is about 94.5, this sideways range. So if we do start to grab the liquidity and then SFP that, yeah, maybe you can buy upon the liquidity grab. But I do think there is a real possibility based off the larger structure. I'm talking about this overall range here. Based off this larger structure, it is absolutely possible that we're going to nuke in the next couple of weeks. Like, be careful, guys. I'm warning you now. Be careful. We could nuke. And if I have a bias and my bias is not very strong right now because of the mixed signals we're seeing and because we did wick yesterday past that level, my bias is that we are going to see a rejection here. It's not a super strong bias though, so please keep that in mind. All right. All All right. What golden pocket are you referring to for adding to swing short? Well, I did. I mean, I added to the golden pocket earlier at 97 220 ish. So we dropped, and I showed you guys this at the beginning of the stream. This could turn into a swing short, right? So we pierced above the level. We wicked into resistance in here. We broke market structure bearishly by taking out a local low. And then we came up to our local golden pocket right in here at 97,200. And then now we're dropping. So I did short that, and that golden pocket lower high could turn into a swing short. Now, if we're looking at rejecting, or if you're looking at you're not in a short position and you're looking at getting into a short position, a swing short position, then now we have a range that is forming. So we're going to look for key levels within this range. Okay, within this range that's going to build up here. Or you could look to come up to one more high to hit that 98.5K, 0.5 Fibonacci. Let's see, not that guy. I'm going to get that off the chart. I'm just going to hide that for a second. This guy right here, 98,467. And to see a liquidity grab, if we do come down here, grab the lows of the range with an SFP, and then get back inside our volume profile, we might make one more move up to actually grab the liquidity from the highs of the range. Because remember, I talked about this. We have liquidity below us and we have liquidity above us. Market makers generally like to take liquidity locally on both sides before continuing the bigger move. So if we are going to see a bigger rejection, it still makes sense that we could come down to the range lows to $94,500. We could grab the liquidity of those range lows only to pump up to grab the liquidity of the range highs into our large 0.5 Fibonacci before seeing a bigger rejection and breakdown of that range. What am I doing here? All right, let's see here. Okay, okay, got that. Travie Trades, welcome in, man. And Donnie Dog, Dog D Dog, welcome in. How do you handle multiple trade strategies? Mike, well, I really only have one trade strategy. I mean, are you talking about like ways of trading, like Elliott waves mixed with pitchforks, mixed with, I guess volume levels? I guess, I don't know, man. I just have developed a system that works for me. I think volume levels are super important. Like I've always preached on this channel, the two most important things to pay attention to in the market are liquidity, number one, and volume, number two. So liquidity levels and volume levels. Naked daily points of controls are volume levels. Naked weekly points of controls. Also, anchored VWAPs are based off volume. So I'm looking at key volume levels, but I'm also looking at liquidity grabs. And like how I got into that long from 91K earlier this week, right in here was a liquidity grab. And then you get that liquidity grab, guess what? Now you can push up. So it was right here. Sorry, right here. Liquidity grab right here, push up. And so I'm just looking, I've developed a strategy. Now, trading swing failure patterns is one of the best strategies there is. I know there's certain people that only trade swing failure patterns because the risk reward ratio is so good. And they're successful. They get a lot less trades than normal traders, but their risk to reward ratio is so good that if they win a couple of them, sometimes they make far more money than people that are trying to trade every other pivot in the market. So how do I manage them all? I guess some of it's practice, or just experience and practice through time in the markets and finding what works for you and finding what doesn't. Now, I'm always trying to learn more. A key thing to trading, guys, is you should always be evolving your trading in some way, not necessarily changing it or changing the strategy, but evolving in some way, learning more. So as I've learned more about Elliott waves, I've integrated them into my prior strategy because now I can use Elliott waves are really good to get a bias. As I learned about pitchforks, I integrated it into my strategy of using volume profiles and Fibonacci retracements. So I guess it's just, practice, experience, and just playing around with it and finding what works for you and what doesn't. Keep one account for scalp, one account for swing trades. Yeah, that is something that I do Travie Trades. I have a few exchanges. I'm partnered with a few exchanges, right? And I have a couple exchanges. I tend to take my day trade and scalp trades on one exchange, and then I have some bigger swing trades that I use on another exchange. But I also, that doesn't mean that, like, for instance, let's just say BYDFI, but great partner to the channel. I do a lot of my daily trading on BYDFI, but my account on BYDFI is a smaller account than on my other exchange. And so on my other exchange, sometimes if I see a good day trade, I'll open it on both exchanges, unless I'm already in a big swing trade on that asset on that other exchange. But yeah, you want to maximize your profits. So yeah, might as well, use a couple exchanges, have one open for any sort of scalp you want to play, and then you could have some open for the big stuff. All right. I'm sorry, guys. I'm way, way behind in the chat. Let me see the range. Yeah. Okay. That range was also the 382 fib in 2022 and now. Wow. Okay, Luciano, you're talking about the 382 retracement from the all-time high, and you know what? The 382 often rejects you in a strong trend. So that absolutely makes sense because we had started a bear market, a strong trend to the downside. Very nice catch, Luciano. Very good TA there. Same, but different. Okay, we'll check XRP, guys. Absolutely. And TXRX, thank you for that comment, man. One of the best technical analysts in the space. I appreciate that. David Brumlow, welcome in, man. That's right. Thank you all. Yeah, thank you all for being part of this community. And David, thank you for being part of the community as well. Here whenever I get a notification, rarely comment, but always listening. Well, Liam, JD11, I appreciate you being here, man. And you don't ever have to comment. I know there's lurkers. I appreciate you all the same. Okay, XRP. Something's going on with XRP. I'm sorry, guys. I'm so far behind in the chat. Oh, it's dumping a little bit. So XRP is coming back into our channel, which is not necessarily a good thing. Now, remember, we rejected from the point of control of our year-long range. This point of control, let me turn off some of these levels. So this point of control is of this sideways range, all of 2025. See, this was December of 2024. So we've been in this larger sideways range for about a year now, not a little over a year now. But recently, after taking new all-time highs, we've been in a larger downtrend, right? Since taking the all-time highs. But after the October 10th dump, which was a very aggressive dump on XRP, and on Coinbase, it was a lot less than on like Bybit. You can see on Bybit, it was way larger. But I follow the Coinbase chart, spot chart. And so if we're looking at this channel after the October 10th dump, let me do this. Let me get rid of this guy. After the October 10th dump, we have a very key sideways range that was developing in here. You can see it was a sideways range that was developing. Well, we kind of broke it down, and then we started a new downtrend, a new range forming a little bit lower in this general area, a little bit lower. But anytime you have a trend like this, making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, you're in a downtrend. And the overall kind of structure of that trend is this descending channel. Now, when you break out of a descending channel, you often will see follow through up to a major resistance or to grab the liquidity of the second pivot of that channel. But we had our year-long range point of control there. So heavy resistance, sharp rejection. By the way, you usually don't get a straight up, straight down like this at a major resistance. Well, with XRP, we did, right? Push right up into it, rejection right from it. But what was key is we came down to our golden pocket. We were bouncing from our golden pocket at 202, and we were attempting to break out of the channel again. But all we did really was come take some local highs, some liquidity of some local range highs, and now we're falling back inside of the channel. So to me, it's likely that we might be finding and confirming reacceptance back within our overall trend of the past few months. And then that means you could fall to the midline of the channel. That means we could fall much further. Also, the move from that low at 177, it was a technical SFP of the Coinbase lows, but very slightly. Look, 177.10, 177.05. So pretty much equal lows there. And to see a real nice SFP, you want to wick past it a little bit to stop those people out. So this move up from this low looks very 3-wave corrective. There is not a 5-wave. And we cannot say this is 1, 2, 3. This is going to be 4, and then we're going to see a 5. The reason why we say that's less likely, improbable, is because we hit our golden pocket, pulled from the lows of wave 3 to the highs of wave 3. If your wave 4 comes down to hit the golden pocket, it's an invalidation for the impulse. So because we've invalidated this now as a 1, 2, 3, 4, 5, we now have to say it's more likely that this move to the upside is completed. It was a 3-wave corrective move ending on a C wave that was a nice impulse on a high amount of volume, which C waves, that's exactly what you want to see. And now we're about to see a bigger move to the downside, possibly all the way down to the lows to take out some liquidity of those lows or to find support around the value area low of our sideways range. And I would say this was a pretty aggressive dump to the downside, impulsive move to the downside. After that dump, we've been ranging sideways. So we can pull our volume profile of that sideways range. Let's pull that volume profile here. And you can see we are back inside of our value area high. So now we would expect maybe we're going to see a move down to the POC of the range. In between that, though, we do have the value area low of our much larger range. Now, that is a important high time frame volume support level. And let me just go ahead and hide some of this real quick. I want to talk about that value area high really quickly. Let's just get rid of this for a second. So this high time frame year-long range, the value area low of this range is important support now, because what happened is we had lost the value area low, back tested it and rejected. The second you rejected on that back test, you expected new lows. Okay, we made new lows. We technically grabbed liquidity or saw a double bottom. And after that is when we were able to break back inside of our range, reclaiming the volume profile, right? Finding reacceptance back within your volume profile. And we never saw a low time frame back test of this. We just pumped pretty much straight up. Actually, did we see a low time frame? Gosh dang it, guys. I'm sorry. Let me zoom into the hourly. And yeah, see, so we broke up through that value area low. We never saw a back test of it. But after rejecting we pushed right up to the POC. We rejected a very harsh rejection from the POC. So now what do we expect to see? Also, I think that was our golden pocket as well. If I can get this guy on here. Right around your golden pocket as well. So golden pocket, point of control, major resistance up here, rejection, and now we're falling, we're coming to back test this area because we busted back inside of our larger range. Now we could be finding reacceptance back within the range, but to confirm reacceptance back within the range, you want to now back test that value area low and hold it as support. If this holds right here, it's in some ways confirming reacceptance back within, and you can make another try at that point of control or even at the value area high. So that is what we're going to be looking for now on XRP. And so if we do drop to about 197, 197 is going to be important local support below us. I will say this, market cipher B, money flow looks pretty bearish on XRP. Hidden bear divs followed by some bear divs, money flow leaving here. Let's look at, and I'm just going to do this real quick. I'm going to get rid of this. I don't want to collapse that. I want to close it. Okay, and now I'm going to turn off our large range, and I just want to look at that small range that we just threw on the chart. This sideways range here. We're back inside of the value area high. You can even see we kind of fell back inside of it, back tested it, and now we're dropping here. So I would expect us at this point at least to come take out our local lows below us, at least to come down, take out these local lows below us. But we do have some support coming up here between, what is this? 199 and 197. So 197 was that macro value area low. And our golden pocket is there as well. So if we take a golden pocket, not from the start of wave 3 to the end of wave 3, but from the start of the move, the lows to the highs, and we look at that golden pocket. Now, let's look at, was this more than a 30? No, this was a, 36% pump. So that golden pocket is going to be there. And I think when I made this box, I said, I want to go from the bottom of the golden pocket to the value area low. But technically, you could throw this box up a little bit higher. You could bring this up. I would say, I would, you could make the box that thick. I don't like that as much. I would be more looking at the 0.65 to that value area low. And we have the liquidity that's resting down there. If we go on to the 1 hour chart, some internal lows in there. And these lows, even though they're internal and they look insignificant, they are not. because what happened? You got a rejection from the value area high of your sideways range, but you were able to hold a higher low. And then look at this right in here was a triangle that was forming. You can see this little triangle that was forming in here, and then you broke out to the upside. Remember, a triangle is a continuation consolidation pattern. So if you have a symmetrical triangle and you pump into a symmetrical triangle, you have a higher probability of pumping out of it because it's all it is a continuation consolidation pattern. Now, those lows there are important because right afterwards, you see nice impulsive price action to the upside. You see a lot of long pressure stepping in, pushing the price up. So all the people that longed within this first leg, or even that longed in this sideways range in here, their stops would go below that low technically. And now that means liquidity is going to be resting below that low. And if we look at that, it is going to be right near your value area low, your large range value area low, 197, 197 is your large range value area low. So that is important. All right. But overall, we could see a drop down to 189. Let's actually look at some volume levels on here. I'm going to turn on our naked daily points of controls. Yeah, okay, so we're actually hitting a naked daily point of control right now from, actually, never mind, that's today's, never mind. And we're on the weekly anyways. I got to go to the daily. All right, very interesting, guys. We had a naked daily point of control at that lower high where we did reject, but it's still showing that it hasn't been tapped yet. We front ran it just barely, at least on the Coinbase chart. We had front run that naked daily just barely. Below us, look at within our box of support. So actually, I am going to take this box and at least move it up to that naked daily point of control at $2. So between $2 and 197 is our next major support level. And I would say 197 is probably the key within that level. You might see a small bounce from the naked daily, make a little bit of a rise, and then you come down and you hit that value area low, and then you form a bit of a bottom and reversal range in here if we are going to hold it and push up. But $2 to 197 is going to be our next important support level on XRP. Now let's also look at, let me just turn this off. Let's also look at our naked weekly points of control. Okay, so naked weekly point of control at 187 is going to be very important. It's also our range point of control of a few weeks. And then we can look at our daily levels. Okay, naked daily at 184. Man, that's actually going to be pretty awesome there. Let me see here. Let's do this. Let's grab this golden pocket. I'm going to throw this 786 on as well. All right, I don't like where that's at. Okay, so this box here, I would actually, let me see what else I was looking at in there. Okay, yeah, there's the weekly there. All right, 187 is actually a really nice box of support, but this box, I'm actually going to adjust this box here. Because our point of control is at 187, we have a weekly at 187, we have a naked weekly point of control at 187, and we have a daily and a naked daily point of control at 184. I would say the box, the real nice level, is between 187 and 184. That's our next nice support box. And your value area low is just below it of this sideways range, but I would say this is much nicer. 187 is really nice for support. And then, yeah, that's what I would say. Now, if we turn them back on our channel, you can also see the midlines in there. And if you fall back inside the channel, maybe we're going to bounce from here, confirm rejection from the channel and move down. That general box of support, along with your channel midline, you would expect if you reject and find reacceptance back within the channel, a move down to the midline. If the midline doesn't hold, you'll see a move down to the bottom. Okay, let me get into this chat again. I follow since he started posting his charts, or should I say his channels. I learned a lot. Yeah, thank you, TXRX. I appreciate that, man. Come up and reject value area low. On Bitcoin, are you talking about? Yeah. Oh, on Bitcoin, that little trade. Yes, I want to check that out. We're still below it, guys. We are still below the value area low. We're even having trouble getting up there. So yes, technically we are above those lows from earlier today, but we're struggling here. Okay. Thank you. Trying to learn every strategy possible and have as much knowledge as possible. I use it to blend a bunch of things. Yeah, awesome, Tony. And just keep working and kind of playing with things. Find what works best for you, man. Hamza, thank you so much. Much love to you as well, and thank you for being here. Holy Corn, XRP. Okay, we got that. Lots came from the crew. Yes, Jason Casper's crew. And guys, I did do a collab video with Jason. I should be putting that up soon. Very cool, very awesome. I love Jason. Are there specific pitchforks in play still or near these levels we are now the larger time frame? Yes. So on Bitcoin, let me zoom out onto the 8-hour chart. We do have some pitchforks. So this pitchfork right here is a very, very key pitchfork. So look at our range for 2025. This is our entire range for 2025. Well, look at how nicely the pitchfork was. By the way, let me just zoom out to the daily, make this easier. In 2024, our prior range was at the pitchfork level as well. Rejected the top of the channel of the top, upper band of the pitchfork. You kind of lost it, and then you rejected the lower band of the pitchfork, and then you made new lows in the channel, or in the range, excuse me. But now we are ranging between the top of the channel and the bottom of the pitchfork band, the bottom of the upper pitchfork band. So look at how nicely this entire year of 2025 has been. Hit into the top of the channel in December of 2024, rejection. Come up again, grab the liquidity, the highs, hit into the top of the pitchfork again, forming a distribution range. You drop all the way to the bottom at 74K to the bottom of the pitchfork band. This is your upper pitchfork band. Now, so very nice swing level positions. Swing shorts here, swing longs here. Well, we get up there again. This time we attempt to break out, but we see a distribution range at the top of the pitchfork, right? Distribution range at the top of the pitchfork. You break it down, and where do you drop to? You drop to that lower part of the upper band again. And now we're bouncing. We're attempting to break out of this. What I would say is crucial is if we lose this support level at around 92,000, let's zoom in on this. That's going to be the back test of this pitchfork band. If we back test this in here and hold it, we might get a move up to that 0.5 or to higher levels, to the 50-week moving average. But we're chopping around and forming a range in and around the pitchfork band. If you guys have watched my channel for any length of time, I've always talked about these high time frame pitchforks often form ranges in and around the pitchfork bands, but we are forming that range in and around the pitchfork band. So if we start to lose this again, it's not going to be a good look, and we could really start to dump here. If we lose the bottom of the pitchfork band, man, we're going to be in rough shape. I mean, I think we could see a significant move down. This would be kind of bear market territory stuff, the midline of the pitchfork. But let me now zoom out onto the daily time frame, and I will talk about the pitchfork that we're back testing right now. So I want to just hide some of this. And we will look at, I'm going to hide this as well. This, I just drew today. I don't know. All right. So I want to show you guys, I'm just going to get rid of this for a second. The pitchfork of our wave 3 Elliott wave impulse. So obviously, if you guys have watched the channel at all, I've been talking about this 5-wave count for quite some time on the channel. From the bottom of the bull market, we have our nice wave 1, sideways flat in a range 2, and you see 1, 2, 3, 4, 5. 5-wave count, sideways zigzag correction, a flat, and a wave 2. Big wave 3 to the upside, sideways and down 4, and then you got your 5. 5-wave impulse to the upside on the higher time frame, weekly time frame. Pulled from the lows of wave 3 to the highs of wave 3 to the lows of wave 4, you can get your trend that you expect Bitcoin to kind of top out for the 5th wave. And we did, right there. And then we formed a range, and then we topped out from the low upper band. And now we've lost the pitchfork. So this is key, guys, very key. We have finally lost our bullish trend momentum from this price action, from the main part of the impulse of the bull market, the main part of the impulse. We finally lost the trend from that. So when you lose a trend like this, you will see some back tests, immediate low time frame bearish back tests, another one. Once again, that 3 taps. I often talk about how on these larger trend back tests, you see 3 taps before dropping and rejecting. So we did see 3 taps, we dropped, but we made a higher low. Now we're going to make another higher time frame. So these were kind of our immediate time frame back tests on the daily time frame. Now, after ranging for a bit, we're coming up for a higher time frame back test of it. If we reject here, guys, this is so important. This weekly candle close is so important. If we do decide to reject here, guess what? You expect to take out your lows below this low, which is 80.5K. Just like if this was the low time frame. Imagine this was the 15-minute chart and we had like a channel or even a pitchfork. You lose it, you see the immediate time frame back test on like the 5-minute, the 3-minute. Then you kind of range for a day or two, and now you're going to come up a couple days later. You're going to back test it for a larger time frame back test. If you reject, you expect to make new lows within the week. Now, because this is the daily time frame, if we come up and reject here, probably within about a month or 2 months, probably 2 months, you expect to make new lows below 80.5K. So that's a pitchfork I'm watching as well. Now, there's a couple other pitchforks that I'm watching. This is this cycle. This is based off the third wave of this bull cycle. But if we go to our macro time frame pitchfork, so this pitchfork here is based off of last cycles, the last prior cycles. Let me get rid of that. From the COVID 2020 lows up to your 65K highs, which was, as far as money flow and volume, the 65K high was actually the high of the bull market. This was just a little 3-wave corrective move to take liquidity and then dump, right? So 65K highs, bull market highs to bear market lows. Very key pitchfork. You can see how well this pitchfork has been respected this entire bull market. Once again, reject from the lower part of the lower band, higher low. Reject from the upper part. You can see that flat in here. You break above it. Finally, for the first time, you break above that pitchfork lower band. You flip it to support. What happens next? You work your way up to the channel midline, to the pitchfork midline. You reject in your 2024 all-time high. You reject from the channel midline. You grind sideways and down for 8 months until you backtest the channel again. The channel holds. Okay, now we're going to make, or the lower band holds. So now that the lower band is holding, we're going to make another attempt to break the midline. This time we do break it, but we form an accumulation range above it. And if we look at this on the daily time frame, now we'll zoom in here on the daily time frame. When we broke above that channel or that pitchfork midline, you can see the midline was acting as support. No daily candle body closes really below it. Yes, we did see one little deviation here, but wicks below it, but no candle body closes. It was only when we started to form a range underneath it that you got your initial back test, your big bearish back test, and then you rejected and broke the range down. So distribution range at the midline, very important. All right, now let's zoom back out. I'm just going to do the 3-day instead of the weekly. 2024, early 2025. Well, after bouncing from a very, very key support level, 74K lows, a very key support level, after bouncing from a very key support, we push up to try to break the midline again. Tap into the midline. We see what was that? A $9,000, $12,000 rejection, but it was a 3-wave corrective move. This was a $13,000, almost $14,000 rejection, 12%. But it was a 3-wave corrective move on larger time frames. 3-wave corrective move. We hit into that midline right here, 3-wave corrective move, hit into the midline, push up again, right? So bounce from the lower band, broke above, rejected the upper band, come down to the midline, bounce from the midline. We're going to work our way towards the upper band again. And if we go to our larger time frame pitchfork, this is where we attempt to break above, and this is where we form a distribution range. This is our all-time high distribution range that we just saw. And September, October, the last couple of months there. But you can see the last tap. So first of all, liquidity grab here. We grab the liquidity from the highs, and then we come up for another liquidity grab. So we grab liquidity at the highs of the range right into your pitchfork midline. You reject harshly. You finally break the lows, break market structure bearishly, and now we have not come down. You can see we are forming a range, guys. This is very, very important. We have not come down to backtest the upper band yet. We have not tested it. We front ran it, and we are forming a range right above it. When I see this, this also gives me a bias that, hey, guys, something ain't right here. Usually if it's going to be a macro low, it's actually going to be hitting into support or wicking past the support a little bit. Now, yes, we did see a front run right here, just barely, but it was a far less than what we saw here. So could we see another front run just barely? Sure. But I would expect three-wave corrective move up to that anchor VWAP. Now we can come down and finally hit into and take out those 74K lows, seeing that bigger flat correction play out, right? Because we're looking at that flat correction. We're looking at that 5-wave count followed by a flat correction. If the super cycle theory is going to play out, this would probably be our most bullish scenario, where our so-called bear market for 6 months, 9 months is just this, and then we're going to see a whole nother impulsive structure start on the weekly time frame. That is still, we have not come down to hit the pitchfork band. Sorry, I went way off topic. You asked me about some pitchforks, and I went way off topic there. Ooh, and I do got to leave in 30 minutes, guys, just to let you know. All right. I'm still an amateur, so trying to challenge in any ways, just giving my thoughts. Absolutely, Tony C. And you know what? You're doing a great job. I see you trying to learn every single day. I see you challenging yourself, wanting to learn, hungry to learn. So keep it up. I have no doubt if you keep up this attitude and keep learning the way you are, you will become a very great, profitable trader. I literally have no doubt in that. Gold and silver hit new all-time highs while BTC dumped. We never see precious metals and SPX hit new all-time highs at the same time. Yeah, Travi Trades, that's a good point. Something is wrong. Well, I think just Bitcoin is still young. Crypto in general is still young. It's still considered a risk-on asset class. And gold and silver are more established, like long-term stores of value. So when there's uncertainty in the market, and especially in global markets, Bitcoin and silver tend to pump because people put their money into a nice, stable store of value. And I think that's why we're seeing gold and silver really do well, and Bitcoin's not so for the last few months, because it's too risky. It's risk on still. Okay. All right. That's what I'm trying to do. Huge WIP developing that blend, still in learning phase. Yeah. Awesome, man. Okay. Wow. Okay. I'm way behind here, guys. I am really sorry. Let me see. Oh, Time Attack. Welcome in, man. Nice to see you in here. Okay. Thank you for being here, and thank you for modding. Always define what kind of trader you're trying to be. Yes. And you do want to define what kind of trader. You know, a lot of people, I do scalp trade, especially lately because the range has been kind of boring. I do scalp trade, but I generally take day trades to swing trades. Like, I'm looking for a trade that's going to be, I'm going to be in it for a week or 2 weeks or maybe even a month or 2 months. But I will, if I see good setups or if I see a good swing failure pattern, like I saw Monday morning, I'll take a scalp trade. It's just, I'm not looking for scalp trades as the regular. Okay. All right. Jack of all trades, master of none. Yeah, absolutely, man. Travi Trades, that's jack of all trades, master of none. And I would say that's the case for me in some ways, you know. Now, I think I'm pretty proficient in pitchforks, and that I've kind of taught myself all that. But yeah, you know. Okay, I typically a lurker, but your channel's teaching makes sense to ask questions and be active. Yeah, absolutely, Tony. I agree. Being active and asking questions will absolutely speed up your learning curve, and it will help you become profitable faster. So good job on you, man. Good job for just having the courage and everything to step up. Guys, by the way, if there is any lurkers in the chat here, I always try to respect everyone. I always try to be nice and give the benefit of the doubt to everyone. Even if they disagree with me, that doesn't mean I hate them or I think they're a bad person and stuff. So you're always welcome to chat up in here. you're always welcome to say, hey, I think you're wrong. I think this is going to happen. It's different from what you think. And I'm not going to like dog you for it or even, we're here for an open conversation and we're here to bounce ideas around each other. So in some ways, when you do have a different idea, I like it when you speak up so I can look at and analyze that idea and say, hey, maybe this person's onto something. So please feel free, everyone, always to speak up. And by the way, if I get your names wrong, it's not because I'm trying to dog you or anything like that. I just, these names, how they're all squished together. Some of you, like Time Attack, I used to call him Tiamat for the longest time because I just couldn't read it. And finally, he spelled it out for me. He's like, dude, this is Time Attack. Like, you've butchered my name for 2 months. I'm like, oh my God, I see it now. I'm so sorry, bro. So if I butcher your name, it's not on purpose or it's not a slight on you. I promise you that. Okay. Genuine question. I really do want to learn all kinds. I think I'm truly a scalper, but I want to get into swing investing. Yeah, and Tony, that's good. So scalping generally takes a lot more skill than and discipline, by the way, than the larger day trades and swing trades. So it depends on if you want to babysit trades, because in scalp trades, you do have to kind of sit at the charts and be active a lot more at the charts and babysit those trades a bit more. So if you're willing to do that, then go for it, man. And you can also have like 2 accounts. Like I said, have one account where you take big spot trades on or big swing trades in leverage or in derivatives markets, but also you can trade scalping on a different exchange. All right. Let's see. Please do not swing trade crypto even at 1 to 2x unless it's Bitcoin. Yes. Well, crypto is very volatile, guys. So even if you're using low leverage, you can still get wrecked on Bitcoin or on crypto in general. We see 50% swings. I mean, gosh, look at October 10th, for example. October 10th, some altcoins dropped 70% in one day. Machi HK, welcome in, man. By the way, Bitcoin BTC Daily is forming bear divs on Market Cypher B already. Yep. I talked about that at the beginning of the stream, Machi HK. Not only are we forming bear divs, but we're forming bear divs at a very, very key resistance. Like at a very key resistance. So we do have to be careful here. I did take the short earlier, guys, and I'm playing this right now as a scalp because we could make a new local high into that 0.5 Fibonacci. But I do think, yeah, guys, we're not reclaiming those prior lows. So I think a drop to 94,500 is probably next. Let's see how that goes. Likely we're going to form this sideways range. We're losing the value area low of the range, and we're not on that little bounce after the SFP. We were not able to even test it. So that means probably some strength to the downside. Okay. I use weeks, and there's a category for spot futures. Yeah. Most exchanges do have derivatives and spot. I know BYDFI does. By the way, guys, really quickly while I'm here, I want to talk about BYDFI, our partners of the channel. So BYDFI is the main partner of the channel. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, I partnered with BYDFI to get you guys 20% discounts on trading fees, up to $8,100 in futures trading bonuses, depending on how much volume you move in the futures markets. And they're offering some of the best initial deposit bonuses in the entire industry. For instance, if you deposit $100, guys, they'll give you a 50% deposit bonus on that $100. So you can get a 50%, $50 deposit bonus, initial bonus. And then various 20% deposit bonuses, I think up to 5K. And then 10% deposit bonuses from 10K to 20K. If you guys are interested, I've also partnered with BYDFI to create a Telegram community where, like earlier today, the short from the Golden Pocket. I told you guys, I just entered a short right here at the Golden Pocket retrace because I do think we are going to continue a little bit lower. And I do post in the Telegram some of my trade setups or trades I'm taking. I also, guys, let you know the analysis throughout the day. There is a general tab in that Telegram where you can ask me questions in the chat. Let me just bring this over here. So you can ask questions. I don't know why it's so small here when I do this like this, but so if you're interested in joining the Telegram, it's free. All you have to do to join is sign up with BYDFI using my affiliate link, deposit the $100 into the exchange. And once you've deposited the $100 into the exchange, first of all, that's your money to trade. You're just using the exchange for trading. You can get the 20% discounts on trading fees. You can earn the 50% deposit bonus. But once you've deposited the $100, there's a Telegram link in the description of this video. click that Telegram link. And once you're in the Telegram chat, type in /verify in your user ID, which will be right up here. And once you've done that, you can get access to the Telegram. And once you're in, you're in. After that, it's free. So feel free to join if you guys would like. I'm really trying to build a great community. I think it's a win-win for both of us, because all I'm getting from that is the trading fees that you guys would already be giving to this exchange or any exchange that you're trading on anyways. I get a portion of those trading fees. You guys get 20% discounts minimum. You can actually earn up to 40% discounts if you deposit some large amounts into the exchange. And you guys get access to the Telegram community. We can build a great community together and thrive and really all support each other to become profitable. All right. To all be profitable. Let's say that. All right. Short from 97,500. Yeah, we might get another move up to 97,500, but likely now, to me, it's more likely we're going to come down and take out that liquidity below us first into about 94.5. We do have that liquidity at 94.5. Let me go on to the 1-day chart and let's look at where that, so we're finally coming down and taking out that liquidity from yesterday into those lows. I would expect a little bit lower, guys. We have that liquidity grab right into the 1.236 Fibonacci extinction right there. So if we look at that, I showed you guys this earlier, but trend-based Fibonacci extinction pulled from the highs to the lows to the lower highs, right? If this is an A, B, C, or a three-wave zigzag correction, you expect to end between the 1-to-1 and the 1.236. But that 1.236 is better, in my opinion, because we have liquidity of the ranged lows resting down there. Okay. And I do want to turn that channel back on. I'm just going to get rid of this pitchfork for a second. And where's it at? Right here. There we go. All right. Thank you, Machi. Thank you, David. I plan to get into stocks. Yeah, awesome, guys. Stocks are great to trade too. I've been trading for over 40 years. Swing trading is great for stocks. It's an easy way to get wrecked in crypto outside of Bitcoin. Yeah, I would agree with that, David Brumbelow. I've always been in crypto since Bitcoin was 38 to 45 backs. Wow, man, that is so awesome. David, I wish I was interested in Bitcoin back then. That is freaking awesome for you, man. It pays to be knowledgeable about like the next upcoming big thing, guys. Like people that bought Amazon when it was still in the garage. They made thousands of X's off that. Solana. Okay, let's go through Solana. What about Solana? Let me just finish catching up on this chat real quick. How many Lambos are you going to buy when we can swing short to 70K? Yeah, remember ZMX, we're going to buy that hot pink Lambo. How many alts bounced from their large time frame 786 in December? Ave, Ada, Aero, Solto. Okay, yep. I mean, you'll always Odyssey, you'll always miss out on some trades, but that doesn't mean there's not another trade to be taken. So just move on from it, man. You just got to move on. Say, damn it, I missed that one. I'll go to the next one. Quick question. Are we in a 5-wave macro move down currently in wave 5? How low does wave 5 likely to go? So Liam, on Bitcoin, I would say we're still in the wave 4 correction. If we're looking at this on Bitcoin as a 5-wave move to the downside, let's go on to the Bybit chart. Because this low is different on Coinbase, but we could be in a wave 1 here, wave 2 here, wave 3 here. This is all a wave 4 retracement to the upside before seeing a wave 5 down. Now, let's say the high is put in. Let's say we're about to dump from here. We can get our wave 5 target by taking a Fibonacci retracement from the lows of wave 4 to the highs of wave 4. And we're just going to turn on our 5-wave target. So between the 1.236 and the 1.618. God, you guys, the 1.618 oftentimes gets hit more. We oftentimes will break through this and come down to the 1.618. So this is really the key zone right here. 70K. What else is at 70K? Oh my gosh. Like I didn't even realize, well, we couldn't have done this wave 5 retrace because we just made new highs yesterday. But if we are putting in the high now, it makes perfect sense because our dump in our wave 5 down to 70K is the most important level of macro support on the chart until we break it, right? I mean, so if we go to our macro golden pocket and we turn that based off log scale, because this is more than a 100% move to the upside, you have to make sure it's based off log scale. Where is our support? Look at that confluence right there, 70K. Now, what else is there? You pull your volume profile and you look at your prior range, because anytime you break out of a range, if you reject your upper range, you're going to retest this range again, the volume support for this range. So the value area high of the range. Well, let's throw the value area high on there. Where's it at? 70,000 value area high. Okay. This support level is the ultimate support level. If we do come down there in a wave 5, we could be looking for swing longs from 74K or 70K. Even if this is going to be a 1, 2, 3, 4, 5, and then we're going to bounce from here to make a 3-wave corrective move and make a lower high and reject from the golden pocket, pulled from the high to the low. And we come up to that golden pocket and we reject, and then we continue down in a bear market, just like the last bear market. Still, along from 70K all the way up to the golden pocket, which would probably be around, let's just do a little thought experiment. Let's put it right here. It would be right around there, 103K, 102.5, 103K, right? So that would be a nice multi-$1,000 move, $40,000 move, 70K to 100K. $30,000 move to the upside, $32,000 move to the upside. Very good swing long position. And then you could possibly short here. Very interesting. All right. Solana. Let's go to Solana really quickly. Yeah, okay. Pink Lambo. I know, Perseros, I know that I have no chance to answer all the comments. I try to do my best in here. And CJ, welcome in, man. It's good to see you in here. I'm short as well, CJ. 98.2 or 97.2, excuse me. But I know I can't answer all the comments, but as while I'm kind of small right now, I try to really get to all of you guys. I know that it's impossible. Anyways, let's get to Solana. Guys, on, what was that, Tuesday? I was talking about right before the stream ended. We were right in here as the stream was ending. We were right in here on Tuesday. And I said the ultimate level is the liquidity grab of the range highs at $147 into your logarithmic golden pocket at 148. I said if we get that liquidity grab from 147, tap into that golden pocket and lose that high, I will be shorting. Now, one of you guys asked me in the Telegram, did you short this yet? And I said, no, I haven't yet, because they asked me on Wednesday after we had bounced from this POC. So we were coming up here and we were bouncing from this POC. And I said, we might make another local high. So I haven't shorted yet, but I did end up shorting Solana. Let me zoom in here. I ended up shorting Solana. It wasn't here. It was somewhere in here once around the VWAP. Once we started losing the VWAP, I did short Solana in there. The key thing though, guys, on higher time frames is we're looking at this sideways range, right? This volume profile between the point of control and the value area low of our 2-year long range, or it's from March of 2024. So almost 2 years, March of 2024. Let's zoom out to the daily. This whole upper range in here. So be March of 2024. We're at the value area low and the POC, right? This is an accumulation range. Accumulation takes time. It's usually a sideways range, and it usually resembles an inverse head and shoulders, right? Like a Model 2 Wyckoff accumulation, tap 1, tap 2, tap 3. It looks like a rounded bottom, like an inverse head and shoulders. Now, there is such thing as a Model 1 accumulation where you have your low, you put in another lower low. Your second low is always lower. Whether it's a Model 1 or a Model 2, your second low is always lower. And then in a Model 1 accumulation, you put in a third low, and that's kind of that descending channel, right? And then you break it to the upside, you see expansion. But this would be tap 1, tap 2, tap 3 in a Model 1, and then you see expansion phase occur. What I'm looking at here on Solana, we are at the macro value area low of a 2-year long range. Very important volume support level, volume support. We are forming a sideways range between the point of control and between the value area low of that volume profile. Now, let me just hide this little guy here. We bounced from the value area low, saw a 3-wave corrective move to take some liquidity of some local highs, and then we dumped, but we rejected from the POC twice. We came down, we made new lows locally, taking out the range lows, and then we were able to get back inside that volume profile, and we pushed up to the point of control. Point of control rejected us a couple days ago at 143.5. We did hold local support, and that was our 0.5 Fibonacci. Remember, we were in an impulse, a 1, 2, 3, 4, 5. And I said it's likely we do come up to take out our range highs. So let me now zoom in on the daily time frame. If you go watch Tuesday's stream, you will see that I talked about all this before it happened. 4-hour time frame. We were looking at this as a double from the lows, a 1, 2, 1, 2, our big third wave. We were looking for a 4, 5, 4, 5, or we could still make one more high. This could be our first 4. This all could be a 5, and we now need to make one more 4 and then one more 5. So the reason we could make one more new local high based off the Elliott wave structure here. You see from this low, a 1, 2, 3, 4, 5. So that is a 5, and now we need a bigger retrace in a 4. Sometimes your lower degree wave 4 comes down to take out the lows of the higher degree wave 4. So we could drop all the way down here and then make one more high, taking out this high and seeing our 2, 4, 5s play out. But the big thing I said, a possible nice swing short position, or at least like nice day trade short position, was the liquidity grab of the range highs into our golden pocket. And then if we lose our point of control and start to close daily candles below our point of control, there is a possibility we could dump all the way back down to our golden pocket. And now I will re-pull this golden pocket based off of actually, let me just get rid of this, and we will pull our golden pocket from the lows of the impulse to the highs of the impulse. Because if the impulse is done and we're about to see a 3-wave corrective move to make a higher low, and I also want to grab this. Okay, if we're going to see now this, let's just say, and I'm not 100% sure that this impulse is done yet. We could make one more high within this impulse. But if it is done, now we want to see a 3-wave corrective move down to the golden pocket or down to the 786. Altcoins do retrace more often to the 786 than Bitcoin does. But we're looking for a 3-wave corrective move down to potentially make a higher low, right? So 3-wave corrective move, bounce from here, grab liquidity from this low into this support, and then something like that, or something like that, right? Where you come down to the value area low in the 786. What I would expect is this is your tap 1 in here. This is your tap 2 in here. This could be a tap 3 where if we long in this zone or in this zone, it could be the ultimate swing long position, because if Solana is going to remain bullish and see accumulation range play out, this could all be accumulation in the making. If we do bounce from this, and then we could break out and then really start to see expansion where you could be longing, whether you want to call that the left shoulder of an inverse head and shoulders or tap 3 of a Model 2 accumulation. Either way, this area could be a great swing long to bring up. And shoot, we might even bring it all the way up to 200 to the value area high. But either way, we did look for the short at the range highs yesterday or Tuesday. We were looking for this exact short position, swing failure pattern into your logarithmic golden pocket. Now, I know some people here in the chat are going to say, how did you get that golden pocket? Because when I pull my golden pocket from the last big daily highs to the lows, and I turn on the golden pocket, it's way up at 152, 150. We didn't hit it yet. Well, what you have to look at is if you are on the log chart and you see more than a 30% drop to the downside, this is a 32% drop, then you take your Fibonacci, you go into your settings, and you make it based off log scale. It's going to correct. It's going to give you the proper 61.8% retracement, which is psychologically ingrained in our minds, in nature, everywhere. So as far as human psychology goes, you want to get that proper 61% retracement, 61.8% retracement. We did, and we're rejecting. And now we're starting to lose. If we close our daily candle below 143.7, we could see continuation to the downside over the next weeks. Did we have bear divs on the chart? Higher highs in the price action, lower highs in the momentum waves, money flow draining out consistently. Very nice confirmation on the 4-hour. Do we see bear divs here? Yes. Do we see money flow bear divs here? Yes. This is the ultimate short trade setup. When I see momentum and money flow bear divs on NAMI and Market Cipher B all combined together, absolute diamond signal to enter a short. Let's go zoom out to the daily. On the daily time frame, no real bear divs, more like double highs, and money flows just crossing into the green. We do see bear divs on NAMI and money flows topping out. So what does this tell me? The intermediate time frames are bearish, confirming a very strong short signal confirmation, but the daily time frame is still relatively bullish, right? We don't have bear divs. Well, we do on NAMI, but we don't on Market Cipher B. But money flow doesn't look the worst. It's actually just crossing into the green on Market Cipher B, and it's still heavily in the green on NAMI and just starting to roll over. So what does this tell me? That yes, we could get a pullback, but the pullback, if this continues into the green and we pull back for a week, 2 weeks, a month, we make a lower high and then we start to push up here, or make a quick, drop like this, start to push up here. This here, because money flow is continuing to rise here as we're crossing into the green, if it continues to rise, and if we see something like this with money flow, it's going to be fantastic. So I'm telling you guys right now, I will be looking for this swing long opportunity. 128, 123, 124, let's say. This is the ultimate level. 123, value area low, 786 Fibonacci. We can turn on some of our levels. Let's turn on our monthlies. Do we have any monthlies around? No. Do we have any weeklies? Okay, a weekly at 125. So now we're starting to develop some confluence in this general area. Do we have any dailies? Oh my gosh, look at all those dailies in there. Now we are starting to see some real nice support between 125 and 123. Multiple daily levels, a weekly level, a 786 Fibonacci retrace, a macro value area low. Do we see any naked monthly points of controls? No. Do we see any naked weekly points of controls? Oh, look at a naked weekly point of control in there. How nice. Do we see naked dailies? Yes, we do. All right. That level, 125 to 123, is the ultimate level of support where I would say swing long opportunity. This is going to be a naked weekly POC, value area low, 786, weekly, daily, 2 dailies. What else am I missing? Value area low, 786. We had a weekly, we had a daily, we had a naked weekly point of control, a value area low, and a naked daily point of control. Let's just say that is prime support. And also, as far as market structure goes, in a rounded bottom, left shoulder, head, right shoulder, tap 1, tap 2, tap 3. I mean, I might even look to buy spot here. Depends on what the market's doing. I bought some a lot lower, so my overall average on Solana is down. But okay, let's see here. Let me check the chat here, guys. I do have to leave in just a couple minutes. We are at 95K. Yeah, let's check Bitcoin really quickly here. Dropping. Guys, today, if we close like with a bearish engulfing candle like this, rejecting from this resistance, big no, big news. That's big news. That might be confirming a rejection from our key resistance. We've been looking at this resistance for quite some time. If you go back and watch all of last week's streams, I was saying it's probable, not possible, but probable that we come up to the point of control because we held the value area low. If you remember, I talked about this last week. We turned on that macro volume profile, and I showed you guys this many times last week. Macro volume profile, the value area low held. Wick passed it, but it closed holding on the daily, held it here, and because we tapped 3 times, we held it. It was likely that we could see a move up to the POC. We have done that now. So now do we lose it? Yeah, guys, please hit the like button if you got any sort of insight into the market today. If you've learned anything today, please hit the like button for me. Please subscribe to the channel. Share it with anyone that you might think finds it interesting. I am trying to grow the channel. I'm trying to branch out more. So that stuff really does help. Writing that down as a note about altcoins. Yeah, Tony C, if you do check the altcoins, they often do retrace. Like if Bitcoin retraces to a golden pocket, because altcoins are a lot more volatile, they'll retrace a little bit further to the 786. And me and Jason have been talking about this in his Discord for years, and he'll talk about that too. He'll tell you he's back tested that mini for many years, and it does tend to play out a lot that way. Oh, we have a CME gap to fill. Okay, wait. BTC can hit 94K level. Can BTC? Yeah. Ram KR. See, this is with the names. I don't know what Ram Crutizy. We can hit 94K. 94.5 is a little bit of support, right around 94.5. But I absolutely think we can come down there. 94.5 is a liquidity grab of some local ranged lows into our 1.236. And yeah, in there. Another thing, guys, I didn't talk about this yet, but this could be the start of an impulse to the downside. A wave 1, a wave 2, retracing to your golden pocket. I guess I talked a little bit about it at the beginning of the stream. A wave 3 breaking down, and our wave 3 target is the 1.618. It's at $93,600, right around our daily level. Why is that not? Oh, excuse me, that was an old daily. That was an old daily. Oh, and we had our naked daily point of control at 94,370. So 94.5 to 94.3, I say, is a good level. And then if the CME gap's in there, you might just drop a couple $100 more to fill that CME gap. Okay, I see a super chat in here. Quiles, thank you so much for the super chat, man. Much love to you. Always appreciate you so much for being here for the super chats. All you guys, thank you all so much. That's what I wanted to know. Okay, if you want, I can be your fun sidekick to manage the comments. Yeah, ZMX, appreciate that, man. Let me see here. There you go, man. ZMX, you can be a moderator. I know you've been in here from the beginning, so appreciate that. Okay, I'm working right now. Did my best to listen during Solana. Had a migraine and slept in this morning. Wasn't on the chart, so I'm not short. Jawfield, that's okay, man. You'll there's always another trade, and I know you know this well. There's always another trade to take. As far as Solana goes, I do think we could see a drop here because we did get that exact rejection, the SFP into our golden pocket, and we're now starting to lose our point of control of our range. But let's say this. If we close the daily candle below, because we might just be seeing, well, this is a bit, because this is the higher high. So a 1, 2, 3, 4, 5, and some sort of contracting diagonal here could be our wave 1 to the downside. And then we could get a push up in a wave 2 to our golden pocket. And then we could get our big third wave. And then we could get a 4 and a 5, something like that. So, now, actually, I wouldn't say it would go that long, though, because if we're going to see a larger A, B, C all the way down to 123, you want your A wave to be a 5-wave impulse. So maybe a contracting diagonal in 1, a push up to the golden pocket in 2, push down 3, 4, 5. Then you would get a 3-wave corrective move up and a B wave, and then you get another 1, 2, 3, 4, 5. Something like that, an A, B, C coming down to that area of support. But there's always going to be a trade to take, man. So don't worry about that. You know what? I almost shorted this. This happened for me. I think this was late at night. I can't remember. Or I remember when this happened because I got the alert. I got the alert that we were hitting SFPing the highs. And I looked at it right away and I said, okay, whoa, it wicked right up into that golden pocket. it's rejecting, but I waited a little bit. I was curious to see if this exact thing was going to happen, if we were going to bounce from the POC. And when we started to bounce, I was like, okay, maybe I should wait to see if we get another local high, create another drive of bear div. It didn't happen, and I was actually surprised because we almost took it out. Okay, can we look at for long from this coming order block? What time frame? Trade diaries. What time frame order block are you looking at? Let's see here. This little. Yeah, I can see. All right, on the hourly. Let's go to the 4-hour time frame. No order block there. Okay, we do have some little internal lows in here. Two-hour. Yeah, we have a nice little order block here on the 2-hour, but it looks like we're busting through that 2-hour order block. Maybe you mean, I don't think on the daily time frame. On 15-minute. Okay, yeah, let me check that. Let me read. I know you said you got to go. I just was curious where you learned to trade, whether you had specific mentor or self-taught or whatever. So, Tony, I have had mentors in the past. Bitcoin Hyper, he's a trader from Sylvania. He has a YouTube channel of his own. He was my initial mentor. And I was a mod for his channel, like many of you are for mine. I tuned in every day during the live streams or every time he live streamed, and I just learned and learned and learned as much as I could. Now, he stopped doing daily live streams in 2020, and I moved over to Jason Casper's community, and I learned a lot from Jason. But a lot of my stuff is self-taught. I have gone on YouTube or I've gone on websites and just looked up what order blocks are, what smart money concepts is, what Elliott waves are. And I've learned Elliott waves from Coons, like I told you guys, So I've learned a little bit from everyone that's an expertise in that, whatever niche they're in. And then a lot of it I've kind of played around with myself, like pitchforks and channels. I largely learned myself. And that is kind of my bread and butter too, is pitchforks and channels. So it's a combination. But I'll tell you this, Tony, I've never taken a course in my life. I've never paid for a course in my life as far as trading goes. It took me years of just learning, tuning into live streams of proficient traders and learning from them. I think a few good ones to look at. Andy from Bitcoin Consensus, Jason Casper, Frankie Candles, Coons Trading, Bitcoin Hyper, all those people are great traders that actually know what they're talking about. Okay, let's see here. Order block on the 15-minute on Bitcoin. Oh, yeah, I see which one. You're talking about this little guy here. I do like that order block, and the reason why I like that order block is because this imbalance this candle right after has a fair value gap inside of it. A little bit of a fair value gap. It's not much. No, it doesn't. Okay. I guess not, huh? Because this wicks to here and that wicks to there. So not really a fair value gap. I think that's the one you're talking about. Maybe this one's already been filled with these wicks. Huh. I mean, this order block, if you're looking at that order block, you can see that we're kind of underneath it already. That's the high of the order block. That's the low of the order block. So we're kind of busting through it and flipping it to resistance, actually, locally. Oh, my God. I'm sorry. I'm on Solana. Duh. This guy. Yeah, that's a nice order block. Okay, I'll tell you why this order block is really good. You see this red candle followed by a bunch of green candles in here. So you have some green, a little bit of red mixed in, and then some more green. This order block is really nice here because why? Because right afterwards, you have an imbalance candle. So you have a big volume-filled candle to the upside with a fair value gap inside of it. You can see, okay, well, maybe it's not a fair value gap, but it's still an imbalance. Yeah, I guess it's not a fair value gap because this wicks to here and this, here. But very nice imbalance candle. So anytime you see an order block with an imbalance candle afterwards, that's an important order block. And I would say, could we bounce from there? Yes. We would be getting so close. And actually, I think that's where your 1-to-1 Fibonacci extinction is. Let me turn that Fibonacci extinction back on. Did I delete it? Maybe I did. Yeah, look at that. That is right. filling that order block would be right into that 1-to-1 Fibonacci. So yes, it is a good target. Nice find there. Very nice find there. Let's see. It's like right here. Yeah. So this order block is right into your 1-to-1. And remember, your most common two targets for a ABC correction or for a zigzag correction, a three-wave corrective move, is the 1-to-1 and the 1.236. They both have great confluence. The 1-to-1 has this nice order block. I still say that 1.236 is a little bit nicer because there is a naked daily point of control there and because there's liquidity there. And remember, liquidity is the most important thing in the market. So both are good levels, though. So maybe pay attention to like 94,970-ish and then 94.5. It could be a nice long position. So we'll see. You know, it is your 1-to-1 correction target. Okay, the only course I've actually paid for is Jason's. It's really good. Also, Market Cipher courses. Yeah, Jason's a really good teacher too, you guys. I really like, and he makes stuff exciting. So for me, it's been an honor to learn a little bit from Jason. You know, largely when I came into Jason's community, I already knew like about weekly levels, daily levels, fib retracements, pitchforks channels. I was pretty proficient at TA, but I didn't know a lot about order flow. And he taught me a little bit about order flow. Also, the big thing he taught was risk management, like understanding risk to reward ratio, understanding, you know, risking 1 to 3% per trade and only taking, you know, TP1, move your stop loss to break even. So say we long this SFP here, you know, we long it. Our stop is going to go below the wick. Let's just say it's that general area. And we're looking for our TP1 would probably be the back test of the value area low. That's still a 6-to-1 risk to reward ratio. Right? But our final TP, because this was a three-wave corrective move, that would mean your final TP would be taking out that high, or not, maybe not even final, but one of the major TPs would be taking out the high. Look at that risk to reward ratio, 16.5 to 1. But this is what's important, your stop loss percentage, because that's how you calculate your position size. So a lot of that I didn't really, well, I knew it, but I wasn't proficient or disciplined in it until I joined Jason. Jason taught me that my cardio during trading is lacking. Time attack, that's great. Okay, you guys, I do got to get going. Really sorry to do this right now because we're finally coming down to that support level. Pay attention to about 95K, you know, 94, 970, because this order block into the 1-to-1 could fill. Also pay attention to about $94,500, or really, I would say even 94,376, because you want to wick past that liquidity. You want to wick past this low. And if we wick past this low into the naked daily or into the 1.236, but because they're all close together, I would like to wick through it and to hit the naked daily and then reclaim it. When you reclaim it, you long. We'll see how it plays out. Pay attention for the daily candle close today. Daily candle close is also important. It's not as important as the weekly candle close, but if we close with a bearish engulfing candle here on the daily, it is not a good look. And that means we could see that bigger reversal. It would also, we would need to pay attention to whether Market Cipher is truly going to roll over here and confirm that bear divs like NAMI already has. Because that could mean some serious downside. But anyways, guys, thank you so much for everything. I really appreciate you all. Much love to you all. I will be live tomorrow as well, 2 p.m. Eastern Standard Time. So please hit the like button on your way out and come join me tomorrow, 2 p.m. Eastern Standard Time. Also, I'll try to post my updates in the Telegram. If I enter a short somewhere, I'll let you guys know, or whatever I do, I'll let you guys know in the Telegram. So much love to you all, and I will see you tomorrow.